The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Wednesday morning, 9:06 a.m. We got 24 minutes to go until the start of trading, and we have markets kicking things off in negative territory. Quite the acceleration yesterday in terms of lower prices. Today, we pick up where we left off. We get the S&Ps down right now about 20 points. You're talking about 0.5% in the red, 41.38. We've almost given up 90 points, 80 points, call it. Yeah, 42.20 from where we were Monday afternoon. The last 48 hours, we've given up about 2% in the markets, 41.39 in the S&Ps. NASDAQ 100, we're down by 90 this morning. That's about 0.2%, 13,639. You get the Dow off 107 points, just above 33,000, 33,023. And the Russell down by about 0.6% as well, 1782. Crude catches a bid this morning, up to above $74, $74.15 right now. We take a look at crude, a little bit of a bounce. And you take a look at the Fibonacci basis, crude just getting above the 50% of that pullback we had after the OPEC Plus cut, spiked it to $83, back to $63. We're back to about 50% of that move in the crude contract. We jump to notes and bonds. 10-year flat right now, but boy, you look at it, right? Quite the pullback, man, from where we were May 4th on the 10-year at what, almost a 117? Yeah, 117 is the spike high we got there. We almost got a 112. Pretty remarkable. We almost got a 112. We're talking about a yield right now in the 10-year of about 3.7%. Where we've been for about the last 4 days or so. The 30-year up by 4 ticks right now, trading at 127.02. We jump over to the gold contract, up about $6 at 1981. Quite the pullback on gold recently. May 4th, 2085. We're trading at 1980. You got to talk about the dollar index. Dollar index right now trading at 103.50. A little bit of higher prices. We'll be talking to our man Teddy Kegstad on the Tiger Forex report at 40 past the hour, as we do every Wednesday. We'll talk to our man Kevin Hincks coming up after the break at 9:15. So we got a couple good interviews. We got some market action. And where do we kick things off? Let's kick it off with the debt limit, folks. Why not? Is it surprising that politics is not as easy as everybody maybe said that they would be? Any negotiation, what's so interesting, excuse me, folks, is that there's nothing like a deadline to get things done, right? And especially in politics, especially right now when we have things so divisive, I would scratch my head when I saw McCarthy and Biden come out of their meetings with so much optimism. It's all negotiation, folks, okay? It's all negotiation. We're coming down to the deadline. You see the two headlines here. The GOP claims the White House shows little urgency in negotiations. Democrats say McCarthy's refusing to offer compromises. Both of those mean nothing at all. They should not be surprising in any way. A fresh impasse with negotiators far apart on key issues, especially on spending cuts demanded by Republicans. When I was listening to some analysis yesterday, right? How does this stuff jump to the forefront now? Right? What do Republicans have a problem with usually? Democrats spending money. And somehow that's the impasse that they hit right now. Negotiators tentatively planning to return to the table today amid the stalemate. There's no sign that Biden or McCarthy have talked since their meeting Monday. And Republicans escalated their accusations that Biden lacked urgency, while Democrat aide called McCarthy unwilling to compromise. It goes over and over, folks. And it's going to stretch. It's May 24th. We're coming into a long weekend. And June 1st is a week from tomorrow. And we got a 3-day weekend jammed in between there. Friday action. I mean, you're going to see a lot of people out on Friday, man, in terms of we'll see what happens in the market. It's an interesting time as we come into a debt limit crisis. So everybody might not be able to leave their desks as early as they may usually have. But it's still a long weekend, man. And in many parts of the country, this is the kickoff of the summer, man. Memorial Day, summer's here. You got a 3-day weekend. And we got a debt limit crisis that is going nowhere, folks. Absolutely nowhere is how I would paraphrase things as of right now. Really surprising to see how this gets done so quickly in terms of the impasse they're at, because both sides don't want to be seen as giving in, man. And yet here we are with no impasse, and we're talking about spending cuts are the problem. Spending cuts are always the problem. We're talking about differences between political parties right now. So that's what I don't understand is how this is popping up. Of course it's popping up, right? We look at a little bit of a big picture. Tough to deny that we just traded right up to that 4,200 price point. And what do? We got quite an acceleration away. And now we're trading low this morning. We're at 4140 in the S&Ps, and the day is young, as our man Basil Chapman would say. I appreciate Basil filling in for me yesterday. And Basil will be coming up next, of course. But before we do, let's jump around to some of the FANG stocks, man. Apple. Yeah, you're going to see Apple, man. If this market trades lower, Apple's got to trade lower. Now, it's quite a decisive break over this trend line that we had going on since the beginning of last year. You break above that area. We reach a high of 176.39, okay? Which, for some context, folks, was almost the week of its high. I mean, it is the week of its high if you push it to January 1st, January 3rd, 2022. This is a weekly bar. So Apple actually reached the price action of its high, all-time high weekly bar. And what have we done, though? We've turned around. You get the high on Apple back from August of 2022, 176.15. And what do? We got just above that area, and we'll see if we reject it. But it's dicey action across the board. We jump over to Microsoft shares this morning. Microsoft, pretty close to those lofty levels as well. You did spend about a month and a half above the price point of 320, but we just got back up to that 320 price point. You got Microsoft down about a couple bucks today. We jump over to Google shares. Google, not quite as the same scenario, right? We just pulled up Apple. Apple was at basically the high of last year. In the beginning of the year, all-time highs almost. You got Microsoft up at that level. Google's a different animal, man. And I say it all the time. Fundamentally, they are on the cusp of losing monopoly status on the internet, which is pretty remarkable when you think about it in that regard. We jump over to some other fan favorites. How about Tesla? Meta. Meta shares. Backing off a bit to $2. This thing's been strong like bull, as my dad would say. And we do jump over to Tesla shares. Tesla, 185, down about a couple bucks so far today. And let's jump over to the dollar index. We're going to talk to our man Teddy Kegstad, as I said, about 40 past the hour. Dollar, 103.51. Where are we going with rates, man? Well, what do we got? We got a Fed decision 3 weeks from today. We have a debt crisis going on. We got banks still in trouble. Commercial real estate really hasn't crept into the market. Everybody's talking about it. But we haven't seen commercial real estate hit the banks at all yet, right? Everything's been duration. Everything's been hold to maturity securities that have put them in trouble. Eventually, some banks in particular are going to be hit by that commercial real estate market as it gets hammered. The world has changed forever, man. Work from home is here forever. No matter what Elon says about the morality of working from home, folks, it's here forever. Technology's changed the game forever. Everything can be done online, and it's only going to get better from there in terms of augmented reality, virtual reality, the ability to interact with people in a manner that resembles being in person. And so, yeah, commercial real estate changing forever. All right, folks, stay tuned. We got markets in negative territory. We're going to be coming back talking to our man Kevin Hincks from TD Ameritrade Network. Let's talk some equities. Stay tuned, folks. We'll be right back in 3 minutes. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got S&Ps trading lower. We're negative by 21 points right now. That's about 0.5% in the red. Let's jump over to our man Kevin Hincks to talk about it, folks. You can check out Kevin's program every day at 12 noon Eastern Time. The TD Ameritrade Network right here on Tiger TV with Fast Market. Your hosts, Kevin Hincks, Tom White, the whole team at TD Ameritrade Network. They got some great guests, folks. They walk you through 3 hypothetical trade setups usually in the program, all of them using options, all of them using defined risk. You can learn a tremendous amount, folks. Check out the program. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. A lot going on this morning, and it's interesting, Tommy. It's important that your viewers understand. Our futures are soft this morning, not based on any major news, but all the foreign markets are down fairly substantial. You've got the DAX. That's Frankfurt, Germany, down 1.7%. The CAC 40, that's Paris, down about 1.8%. The FTSE, that's London, down 1.7%. The Nikkei, that's Japan, down 0.9%. The Hang Seng, down 1.6%. Those markets are affecting the futures this morning. But you can also say that those markets were affected by yesterday's stock, U.S. markets movement. So it's kind of a snowball effect that you're seeing this morning. And when does it stop? Well, I think it stops or recalculates when the U.S. markets open. And the U.S. markets are dealing with, a lot of news right now, Tommy. And the debt ceiling, I believe the debt ceiling is the snowball up in the air that's distracting people from inflation and yields higher and the dollar higher, Tommy. And so I think there's a lot of things that the debt ceiling talks are distracting investors from that they need to pay attention to, frankly, because, Speaker McCarthy just came out and said the staffs are meeting again this morning. The talks have been productive, blah, 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 right? And so when that happens, you're still going to have to deal with yields that are significantly higher, the dollar that's significantly higher, and inflation that came out in, I believe it was Europe or the UK, that is way too high, Tommy.
Yeah, it's pretty interesting. I saw the same headlines, and I love how you sum it up, man. Blah, 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 because it's like it's the usual stuff, right? Of course, it says Republicans are worried about spending cuts. I mean, hoopla, hoopla, man. Of course we got the usual disagreements going on as we're talking about Washington, budgets, debts, all that stuff. It is pretty interesting, Kevin. We're coming into June. We got a long weekend that we're going to jam in there. And like you said, what I reminded my viewers at the beginning of the program is we got a Fed meeting 3 weeks from today, man. And inflation is still here, and that's going to be at the forefront. I think a lot of us believe, with a little bit of hope maybe sprinkled, but believe that they will get a deal done because the ramifications would be so dramatic to the downside for everybody if they don't. But I think we're going to face a little bit of volatility in the forefront, and we'll see where we go from there, man. But as you said, markets, down across the board when you talk about Europe, Asia, and this morning we kick things off. What do you think about the VIX, Kevin, spiking to 20? Quite a quick spike there. We got 1978 to be exact. But on last Friday, we had a 15 handle in the VIX, and just like that, we're up to almost 20.
Well, I think that's really a function of the market movement that you've seen, Tommy. I think it's just, there's a lot of people long protection right now, or some type of hedge on their accounts. And so I think you're seeing a lot of that. Now, how does it last? Remember, you had the markets down yesterday. You got the foreign markets down overnight. You've got the markets looking lower to start the day. So not really surprising that the VIX has spiked overnight. Remember, it was 18.5 at the end of the day yesterday. That's a little higher than it has been, but it's spiking overnight. Let's see what the volatility does once the market opens and see if it stays up here around 20. That'll be an interesting test today because pre-market VIX, I'm a little less convinced that that's actual until I see it when the options in the S&P are actually trading, Tommy.
Yeah, that's why people like that open, maybe sometimes the close as well, as you really get to find out, especially the open. I mean, supply and demand is where price comes about, folks, and we really get to see supply and demand on the market open versus pre-market when you get some light volume, to put it lightly. With that in mind, Kevin, what are you guys talking about on Fast Market coming up at 12 o'clock today, man?
Big day on the show today, Tommy. NVIDIA and Snowflake are the two earnings. And then Likefolio is going to do a presentation because, retail apparel is going on right now, Tommy, and there's a lot of news coming out. Kohl's overnight. Look at the move that Kohl's is making this morning. We were talking about them yesterday on Fast Market. Today we'll do Ralph Lauren. And so we'll cover them with a bunch of data. So, we're looking at NVIDIA, obviously the high-profile name today, Snowflake, and Ralph Lauren.
I'm a big fan of Ralph Lauren in my household. And,
the pony's
Kohl's,
still there, Tommy.
Right? And Abercrombie & Fitch as well, man, up almost 20% this morning. Pretty remarkable. Back to NVIDIA for a second, Kevin, because, boy, quite a run this thing has had from the lows. Give us a little teaser on NVIDIA, because I remember at the end of kind of that bull run towards the end of 2021, NVIDIA had a similar run in 2021, man. Made it from 125 up to 346. And I remember some of the multiples that, analysts were out there talking about, saying, NVIDIA at 346. My goodness, they got such growth priced in all this, and it trades from 346 down to almost 100. Well, we're back above 300, which is pretty remarkable. Quite a comeback, you could say, on NVIDIA, almost pushing back to the all-time highs, which I don't think anybody would have called when you're talking about being near 100 in October, and it's still May, and we're above 300. What do you think of the price action in NVIDIA ahead of the discussion you're going to have on Fast Market today?
A couple days ago, Tommy, the stock was trading over $313. Now it's trading, it looks like it's going to trade just over $302. But up there, Tommy, this PE was 180.
There we go.
180 times earnings, the valuation. And it's only been up there twice, and that is in the dot-com bubble and when the pandemic and cryptocurrency and that bubble hit. So, like you said, this stock can really move, and it's moved sharply up to over $300, and now it's soft the last couple of days, and it's soft this morning, but their earnings will be pretty spectacular today, Tommy.
And pay attention to those PEs, folks, because sometimes they get a little bit lofty. What do you think about AI? I mean, we got about a minute left here, Kevin, but when you were going through those and you were talking about, the crypto bubble kind of, is there going to be an AI bubble? I know it's going to change the world, man. I've talked about ChatGPT, but it seems like stocks might be getting a little bit ahead of itself right now when you bring up some of those PEs and the accelerations we've gotten overall.
Well, here's the way I think of things that get really incredibly popular, Tommy. Streaming was really popular. Remember when Disney rallied so much based on streaming, and then competition came in because everyone's doing it, right? Some people will do it better than others. So I think things get really popular, and then everyone floods in there, and then it gets a lot less popular or harder to monetize and make profits from. So I'd be extremely skeptical, not about AI, but how popular it can be.
Yeah, bringing those dollars to the bottom line, man, as everybody gets in for sure. And Netflix as well, man. I jumped through Netflix. I mean, we all know $700 to $162. Kevin, I appreciate it on a busy morning as always, man. We'll be watching the show today. NVIDIA, Snowflake, can't wait, man. You have a great one. We'll talk to you tomorrow, brother.
Have a good day, Tommy.
You too. Folks, check it out today. Every trading day, fast market. NVIDIA, man, quite a story. We'll be right back for the open, folks. Stay tuned.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You're looking at S&P down about 20 points. You see, right? Pretty much a pre-market session lows, right? You open at 41.38. We're down by 20 points. NASDAQ 100 down by 95. Pretty similar action, man. You're talking about the NASDAQ 100 giving up 350 points from where we were on the spike high. We'll call it Monday night at about 10 p.m. Eastern time. Dow off about 90. Russell off about 12. Let's see how the dollar index is moving on the open right now. You get the dollar index 103.53. Quite a spike to 103.77. As I mentioned, talking to our man Teddy Kegstad next segment, so don't go away. Always an interesting one, especially when we got so much volatility in dollar. I mean, look at that spike, man. Just this morning, dollar yields across the board currencies. All right, we jump to the next story. Keep your eye on this one, man, from the Journal out. This morning, for banks, debt ceiling drama doesn't end with a deal. So I talked about this recently. I think it was in a Bloomberg article, and I was talking about how what's going to happen here is that a deal gets done. The government needs to replenish the coffers, and they really need to replenish it this time because it's stretched so many months out, right? They're probably going to raise like $1 trillion or something like that, I think. I don't know if they mentioned it in this article. But what they talk about here is that ending the standoff will enable the U.S. Treasury to raise cash to pay its bills, okay? Normally, that's a dull part of the financial system's plumbing, but these aren't normal times for many banks. So what's going to happen here is the Treasury is going to refill the huge hole that it has in the multi-month drama that's forced it to dig. The refunding process could add to the competition for the cash of savers and investors, and that's going to exacerbate worries about banks' funding. Now, the last article I was talking about on Bloomberg on this specifically stated that this would be akin to basically another 25 basis point hike. Okay, because what's going to happen is you're going to have the government going out and raising $1 trillion. So what's going to happen? Well, if you need money, you're going to have the government out there saying, hey, I need $1 trillion. I'm going to pay some interest yield for it. Well, if you need money too, and there's a player in the market that's pushing out $1 trillion, they're going to have to get that $1 trillion from somewhere, folks. Somebody is going to have to loan the federal government $1 trillion on ballpark, okay? Whatever it is, whatever they have to raise on the end of this debt crisis, you're going to have the government out there saying, hey, I need to find $1 trillion. Somebody needs to lend me $1 trillion right now because the government needs money. You'll have the full faith and credit of the U.S. government behind it, even though that's been a little bit weakened, okay? And I need that $1 trillion. I got to find it. The government needs it. I'll pay you a market interest rate that's fair and reasonable. Well, guess what? Banks are in the same business right now, man. Banks are out there saying, hey, I need money. I will pay you a very decent CD rate for that cash. So what's going to happen is you're going to have a real tight battle there going on. Banks could face additional competitive pressure during the process. Yeah, in order for the Treasury to lure money market funds out of reverse repo as debt buyers, these funds must be comfortable taking a bit more so-called duration risk. Have we heard of duration risk at all recently? So the yields on new bills will need to be sufficiently high, particularly if the market's view is that the Fed still has more rate increases in store. Yeah, it's going to happen, man. If you're a bank, you don't care why money market rates are rising, but they are rising and you need to compete with them. Okay, so there is going to be a competition for money that's coming out when you got the federal government that's going to be raising money to the degree that they are. And nobody really knows how it's going to play out. That's kind of the disclaimer at the end there. There are many variables in this complicated mechanics, but questions about how it might play out and interact with the quantitative tightening process will only fuel the backdrop of uncertainty. Yeah, and I heard this from Jamie Dimon. I think it was Monday, right? Yes, on Monday. So I heard him talking about this, man, and he was adamant that he said, listen, this quantitative tightening, okay, I am probably more concerned by quantitative tightening than almost anybody in this room. You see huge distortions in the marketplace already. Some of his other quotes, they said something like, listen, we've never had quantitative easing like we've had it. We've never had quantitative tightening. He said, I am more worried about that than anything. I'm more worried about it than anybody in this room probably. So pay attention to quantitative tightening as it comes in, and it's going to matter as all of this comes about at a pretty similar time in terms of all of it happening. And what do we got? We still got inflation going on. Dollar catches a little bit of bid in the last few minutes. Markets pretty much stay where they are on the open with the S&P down by 20, NASDAQ down by 62. A little bit of a bid on the open there. Let's see how the VIX is opening up right now. Volatility index almost hit 20. We're back to 1967. And yeah, you better believe that people are taking insurance, man. things can get a little dicey, folks. Very difficult to imagine how this get done because politics are so divisive right now, which is a bummer. That it shouldn't be this. I mean, politics is compromise, folks, and that just went away a long time ago, which is a bummer. But everybody's got differing opinions. It's a bummer that we can't have compromise anymore because everybody goes hard left, hard right, and we need compromise, and that's what makes moments like this very difficult, and they only get more difficult, man. And we're coming into what? We're coming into an election year of all things. So, yeah, and I say we're coming into an election year. We got a presidential election going on next year. The stakes are high, of course. And so, yeah, people don't want to be seen as giving in, et cetera, when they're going to be running for office, basically like right now. Now, we stay on that topic for a moment, okay? The debt limit impasse raises specter of a rare Treasury auction delay. Additional borrowing may become impossible as soon as June 1st. Yeah. You had an auction postponed in 2015 until that limit was reached. Now, the debt limit right now is $34.1 trillion, okay? But supply is volatile under normal current circumstances. By contrast, auctions for long-term debt are regular and predictable, okay? While it's too soon to predict a disruption to the auction schedule, the sales that appear to be most at risk, June 12th and 13th, you better believe it, man. They include a 3-year note, the reopenings of a 10-year note, and a 30-year. June 12th is going to be here before we know it, man. In the 2015 episode, that says the debt managers delayed a planned 2-year note sale because the risk it couldn't be settled without a debt ceiling increase. We're coming up to that line, man. And if this starts happening, that's where you're going to really see the market start to freak out, okay? The period between June 2nd and June 14th is the danger zone. That's, let's see, Blake Gwynn, the head of U.S. interest rate strategy at RBC Capital Markets. Any auctions in the first half of June could have potential disruptions. And that's where you're going to see where things really get funky, I think, if we stretch to that area. Now, you know what the kicker is about June 4th, folks? June 14th? That's Fed Day. That's the day that we're supposed to get a Fed meeting, and we will. So you're talking about the end of the danger zone. We get a Fed meeting that's basically a live meeting now, and we'll see where we go from there. Pretty remarkable when you think about everything that's going on at the same time in this market right now. All right, so much for the lift. Market still negative by 23 this morning in the S&P. Let's see how the big dogs are trading right now. The biggest of them all, Apple. Well, there's a bid for you, man. That's probably the reason why you get a bid in the NASDAQ 100. I mean, Apple just trades up $2. They just added $32 billion in market cap while we snapped our fingers on the open. Remarkable. I tell you, everything's been the focus on Apple because it's such a big player, of course, but Microsoft is right up there now, man. Microsoft's market cap is approaching $2.2 trillion, something like that. Let's just make sure, as I tell you. We'll go over to the fundamentals. We'll drill it down. Yeah, $2.33 trillion is Microsoft. Apple is sitting at 2.7. So Microsoft within striking distance. But Apple, they're catching a lift. NASDAQ 100 down by 64. Stay tuned, folks. We're coming back with our man Teddy Kegstad. We'll talk a little Forex. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the U.S. futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps right now down about 23 points, trading at 41.35. And as we do every Wednesday at 40 past the hour, let's jump over to our man Teddy Cakestat. Folks, you can read Teddy's Tiger Forex Report every Monday. He puts out a new issue. He's got updates throughout the week when warranted. You can check it out under the newsletter tab at TFNN. It's only $97, folks. It comes with a 30-day money-back guarantee. You got 2 archive webinars that go in there as well as part of the membership. And yeah, we got some action as usual on Wednesday. Teddy Cakestat, good morning.
Good morning, Tommy. Yes, we have some action today.
Boy, a little bit of a pullback from the market highs that we saw earlier in the week, Teddy. We just gave up about 90 points in the S&P. Market's continuing to drop off about 0.6%. We got a lot going on across the globe, though, as well. In terms of markets lower in Europe, we got some action in the dollar index, got some action in crude catching a little bit of a bid. Where do you want to kick things off this morning?
I think the European vibration is something we should definitely address, is that it definitely impacts the FX markets.
Well, let's do it, man.
Okay, well, we have the CPI that came out in the UK today that was way above forecast. So, and I'm really surprised that it's not catching as much news, let alone market reaction over here yet. Yes. And I'm to stress yet.
Sure.
It definitely has impacted the foreign markets, their equity markets. The British pound, I'm bearish going into this week to begin with and throughout the next week and a half. I'm surprised that this number didn't cause more volatility, at least for on a couple of hours at least. It's very surprising to me, So, I mean, the only currency right now that's strong against the dollar today is the euro, whereas actually the dollar has caught us quite a bit. And when it comes to currencies like the Australian dollar, the New Zealand dollar is getting smashed today. And irony of it all, the U.S. dollar Canada, which has been in just a sloppy range trade today, had an explosive move, So it's very interesting to me when you have some of your lesser major FX crosses that are, so volatile and active, whereas you have the pound, which is the third largest currency in the dollar index, and it's kind of in a tight trade today. It just doesn't make any sense to me when it comes to that. But I think we have to be aware of the CPI there, that inflation is not going away in Europe, and that's going to be, I think, a ringing bell throughout the summer, and that's going to be something we have to address with our U.S. Fed as well.
Yeah, it's pretty remarkable, man. I was looking at those numbers this morning, and I was thinking of you, of course, knowing we talk on Wednesdays. And the numbers, folks, okay? So UK inflation fell from 10.1 to 8.7%. You're talking about 8.7%. The market was looking for 8.2, though. And on a month-by-month basis, Teddy, it was 1.2% versus 0.8%. Core CPI rose to 6.8% from 6.2%. It seems like they're a world of difference away from where we are right now. And who knows, because you've been talking about that you're looking for some more hikes, man, and we get a lot of numbers as we come into the end of May, the early part of June. We're 3 weeks out from a Fed hike today. But if you could explain to the listeners, Teddy, because I know, we're talking about other central banks. You've talked to us about when, of course, they're going to be hiking. That's going to impact their yields, our yields. When you see something like this, now we know that anything can happen in our economy. And I think a lot of people at least recognize that we got a long way to go. Maybe we're on the path, but boy, things might be a little rocky. But with that type of a number in the UK, and you see, I was pulling it up as you were talking about it in terms of the pound and everything like that. How do you see that for their Fed? Because, of course, it talks about in just any random article you're talking about that, yeah, they might not be done hiking, man, if they're still dealing with rising inflation. Is that going to really put the pressure even more so on our Federal Reserve? Or how do you relate that back to our Fed when you see numbers like the UK, and the UK is the pound, it's not maybe as big as the euro, but how do you see that affecting, Chairman Powell maybe 3 weeks from today if they know that they're going to be competing with the UK that now has core CPI rising to 6.8% from 6.2%?
Sure. Well, if CPI is rising in the UK, that means that they still are trade partners with the EU. That means you're going to have inflation that's not just in the UK, it's going to impact the EU. Now, combined between the UK and the EU, we still do import a lot of products from those countries. So if there's inflation in those countries, that means there's going to be inflation in our imports. Okay, so that's going to mean that there's going to be a tug of war, definitely, I think, between our Fed and the Bank of England. Whereas if, now we are probably not going to, let's say that the Bank of England raises a half a point. We're not going to retaliate with a half a point just to counteract them. Remember, we're ahead of the curve on this, okay? So, but definitely, if the more or the longer we see any rate hikes, or especially larger rate hikes by countries such as the UK or even out of the EU, for you to think of their central bank and what have you, then I think you're going to see more stress on our Fed to continue to raise a quarter of a point. Now I think that they are running out of bullets and aren't going to be able to do what we've done over the past year and a half. But then we still have inflation here. So I mean, until we see, and then we have, I think the jobless claims tomorrow. You remember, we're coming into holiday markets. We have jobless claims tomorrow, and then we have a 3-day weekend before we have unemployment next week. We have some big numbers that are going to come out before the Fed meeting, and right now I don't think unemployment is going to be where they want it. Remember, they want high unemployment, and some of those numbers are starting to be reflective there. But then there's other things that, we have the unemployment is not breaking the way they want it to. They want higher unemployment, and for some reason we still have lots of job growth in lots of areas in this country. So that's twisting their narrative apart. So unless they start to drop the employment factor out of the equation, a quarter point hike, I can't see how that's not going to happen. And I think that's going to weigh on yields as well, because, if you look at where we're at, the Treasury bonds and the Treasury notes are still trading a lot higher than they were back in October of last year. And that's what, how many rate hikes have we had since then? So if you look at the rubber band effect rate alone should have, yields explode over the next few months.
Yeah, there's so much volatility, man, in terms of unknowns that we're coming into. What do you think about the whole debt conversation going on and how that's impacting things? It's kind of the usual antics in Washington in terms of disagreements. They're talking about spending cuts. Of course they're talking about spending cuts, man. What do you think about that in terms of, because obviously when you're talking about yields, do you factor that into how you're looking at things over the next few weeks? Because you just said it, man. We got Thursdays tomorrow. Friday is before a long weekend. I imagine that people will be trying to leave their desks a little bit early. And then, boy, we come back, man, and, a week from tomorrow is June 1st. Just like that, we're into the mix of kind of critical time frame of that debt limit.
Sure. Well, the whole conversation, like you said, is nothing new on both sides. I think the biggest problem is that, look at how much debt we've tacked on in just the last year and a half. We cannot be running where we have these spending packages of multi-trillions of dollars. I mean, people are numb to the word trillion, but that's right? Because they don't understand math. $1 trillion is still truly a lot of money, and especially when you've put a stranglehold on the economy by force, for 2 years, and now you look at inflation and taxation running amok, you have to have some sensibilities here. So, okay, maybe you don't do spending cuts, but then you have to put a mandate that there can be no multi-trillion dollar packages under any reason, unless it's for defense, of our country, period, for America for at least a year or two. I mean, it's become common now that every 6 months they're like, oh, we need another $2 trillion for these new programs and things.
Teddy, hang with us one more segment, all right? I want to go over the dollar index when we get back, because I know everybody loves that. We'll be right back, folks. Stay tuned. We'll come back with Teddy.
Tigers Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tigers Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tigers Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tigers Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&Ps down about 33 points. No lift on the open right now. 0.8% in the red. And, folks, we're talking to our man Teddy Kegstad. You got a few minutes. Head on over to the front page of TFNN. Right under the newsletter tab, you'll see Teddy's Tiger Forex report. You can check it out. It's $97. And, Teddy, I wanted to check out the dollar index. And I know you do such a great job of giving us the information of the individual pairs and how there's divergences going on, which I think is so cool, which is why people should really check out your report to understand. because so often we just look at the dollar index. It's really easy. It's, a lot of euro in there, pound. But you do a great job of breaking down the individual pairs. But a lot of people love that dollar index, man, and we've gotten quite a spike up to 103.61 right now. What do you think about the dollar index at this price level after quite a little bit of a lift here?
Well, it's definitely had a nice little pause here while it's buffering on these new highs now. Because we're coming to a holiday market especially, this is typically when you start to see a lot of sideways action because the markets just start to get thin. We've hit good resistance. Can we go higher? Yeah, but I think that's really indicative of if the euro US dollar goes lower right now, because you can see how all the currency pairs right now today are down versus the dollar. Only the euro is up. So yes. That's how much of an influence it has. And like I said in the last segment, look at the New Zealand dollar today. It's getting hammered. The Australian dollar is really getting hit. On a daily basis. Yeah. So when you see that momentum, you can see that there's strength in the dollar index, and a lot of that has to do with yields. Even though yields are slightly lower, or they were before we started the last segment. Overall, they're strong, and they should continue to get strong. And I think that will be one of the biggest fundamental supports for the dollar index. So any break in the dollar index I see over the next, not just days, but over the next few weeks and couple months, is a break to buy, I think. We found a lot of support in the dollar. Yeah, everyone keeps talking about the BRICS and all this and stuff. You know what? The dollar eventually will turn. Eventually, the world will come to an end. Eventually, a lot of things will happen. But right now, I wouldn't get too, worried about it.
Pretty remarkable. Risk-free rate of return, right? 10-year, 3.7%. Not bad, man. Not bad with everything going on. Teddy, I appreciate the time as always, man. I look forward to talking to you next week, man.
Thanks. You guys have a good, happy
Have a great Memorial
holiday.
Day weekend, man. Folks, thanks so much.